Good morning, everyone. Today is Thursday, April 20th, and I thank you so much for joining into our weekly ACA webinars. Some things to talk about. If you recall, the administration is on recess. This is their second week of recess, so there's not tons going on, but enough that I wanted to update you. Before we get into that, I just wanted to let everyone know that is new to the format. My name is Deb Wilkinson. I'm the Vice President of the Health Plan Options Department here at URL, and I oversee the group health and individual health. So if you have any questions on that, I'm your gal. If you're also new to the format, you want to ask questions, we do like to treat these weekly webinars as a place where you can come and get your questions answered. And if you're new, you can either raise your hand icon on the control panel to the right of your screen, or you can type your question in the question box, and I'll answer that at the end of the webinar. So just for a little bit of technology, how about a show of hands if you can see my screen and hear me okay? I don't see any hands. There are hands. Awesome. Great. Okay, so let's get into the new administration. This is a new segment since President Trump was elected, just to let you guys know what's going on as quickly as I know what's going on. CMS did come out with a blast on Tuesday. That's going to be included in my newsletter that goes out today, and it's the final market stabilization rules. So there are a number of rules and more details, but this just gives clarification. One that surprised me was the open enrollment dates, because this had been scheduled to take place in 2018 for 19 enrollment, but it looks like they are changing the open enrollment dates for this year from 11/1 to 12/15 of 17. So if you recall, last year it ran 11/1 to January 31st. So it's about 6 weeks shorter and only runs about 6 weeks. So those of you that are in the individual market, just be mindful of that. The portion of the stabilization rule to reduce fraud, waste, and abuse, this really just promotes the individuals that are coming in through a special enrollment period to provide proof of their qualifying event. This one is interesting, promote continuous coverage. We talked about this a couple months ago, but the final rule promotes personal responsibility by allowing insurers to require individuals to pay back past due premiums before enrolling into a plan with the same insurer the following year. And of course, this is intended, they say, to address gaming and encourage individuals to maintain continuous coverage throughout the year, which should have a positive impact on the risk pool. So if you have a client that was with Capital or UPMC and they decided that they didn't want to pay their premiums and they owe past due premiums, they cannot reapply without paying off that bill. Now, of course, this is supposed to not promote gaming of the system, but I'm sure the insured will just go to another carrier. But again, it is something. More choices for consumers. They changed their actuarial value flexibility to develop more choices with lower premium options and empower states and reduce duplication. They said the final rule reduces waste of taxpayer dollars by eliminating duplicative review of network adequacy by the federal government. So, those are all, I guess, positive things that are taking care of some of the issues that did happen with, again, the gaming of the system and coming in and out of the system, not paying premiums. So we'll see what effect this has, and we'll go from there. Additionally, the administration is hoping, I just read this morning, to reintroduce the American Health Care Act after recess ends and before the 100-day mark. The 100-day mark is April 30th, so that's the end of this month. It'll be interesting to see if they can keep to that, that time frame and that deadline, and what impact, if any, that will have for the filings of 2018, because the carriers obviously have an idea of what they want to file. Right now they have to file by May 21st, 22nd. So you can see the timing on this is kind of crucial as to how quickly some of these provisions, if passed, if we have a bill passed, you know, what that will mean for this year. Really don't know. I know carriers are waiting for confirmation that any risk adjustment payments will be made prior to making decisions to continue offering individual products in 2018. I also read an article on that. I believe that one is also in my newsletter. So again, there's a lot of uncertainty still, and we just need to either pass this bill or just move on, I think, because something has to happen, that we have to have some, at least some level of direction for 2018. Just of note, the handouts that I have on the webinar panel for the Day on the Hill in 17 and also the pre-day, part of what's going to be discussed for those of you that are in the individual market, it is very timely, and it is something that you might want to consider attending, both the Monday afternoon event and also the Day on the Hill on Tuesday. There's a bill that is looking for sponsorship from Mike Tobash to allow an amendment to Act 147 to allow agents to, pardon me, charge a fee, an agreed upon fee for the sale of individual health insurance. Let me say that again since I messed that up. So the sponsorship, they're looking for sponsorship of an amendment to Act 147, which would allow agents to legally charge an agreed upon fee between you and your client for the enrollment of individual health insurance. Pardon me. Definitely a positive. Cap Blue Cross, let's move on. Cap Blue Cross, they have a new portal, and agents are able to go into these portals, look at their blocks, look at renewals, run their renewals, etc. I apologize. Some of our friendly competitors are not announcing that they're not doing your renewals. I want you to know that URL, if you are doing your group business through URL, we will still provide this service to you, offering your renewals. And the way we run our renewals is we look at the current plan, we pull the renewals, we do buy-ups, buy-downs, and then a level, a plan that is similar to what they currently have. And we also offer our recommendations. So we have a pretty unique, I think, and robust renewal process. So again, if you're kind of stressing out about having to do your own renewals if you're with another general agency, just know that if you are with URL, you're not going to have to do your renewals. So if you have questions on that, just give me a call. Again, the Starmark webinar is set for next week, next Thursday from 2 to 3. I encourage you to at least sign up for the webinar, even if you can't attend, because I do think that it's an innovative product, a level-funded innovative product, not affiliated with any network. It is available for 5/1 effective date. So prior to the webinar next week, if you want to send over censuses and get that quoted, we're happy to do that for you as well. Just an additional reminder that NEPA, Highmark East, and UPMC are not paying commissions during SEP. I want to make sure everyone understands that. And that's really it. Brings us up to our open forum. While you're typing in your questions or raising your hands, just know that we'll be back here April 27th at 9:30. So we'll have a webinar in the morning, our weekly webinar, and then hopefully you can join us in the afternoon from 2 to 3 for the Starmark webinar. So let's see how many questions we have today. Britt says, does the continuous coverage payback last indefinitely? Example, you switch in 2018 to another carrier to avoid payback, but in 19 you switch back to original carrier. Can they look back 2 years? Also, does this apply to 2017 enrollment? It doesn't say anything. Let me just read more. It doesn't say anything, Britt, about the continuous coverage. I will look more into that and follow up with all of you next week, but I'll get you your answer, Britt. But it does look like it's going to take place for 2018 enrollment. Yes. Bill says 6-week open enrollment is absurd. If I meet with 8 clients a day, I will still meet with well over 100 less than this year. I understand that, Bill. Unfortunately, that's just something that they think will stabilize the market. Of course, you know, all these lawmakers don't really understand the market, but they're thinking that that will stabilize. And Jim says, Deb, will the Starmark webinar apply for individual plans? It will not, Jim. It is a group plan, goes down to 5 lives. It's a level funded, self-funded plan, so it is specific to groups. So that's it. Those are all my updates for today. I will follow up with everyone next week with additional information on some of the stabilization rules. And as always, I truly appreciate everyone joining in. It's a beautiful day outside, so hopefully you'll get out to enjoy it. One last thing, please print out the handouts for the Day on the Hill and the pre-Day on the Hill if you have any interest, or email me or call me and I will send you the registration. We really need our voices to be heard. So if you are available next week, please take some time and fight for your industry. And that's it. So again, thank you so much for joining in, and have a wonderful day, wonderful balance of the week, and an amazing weekend. Thanks. Bye-bye.